We talk a lot about history repeating itself, but usually people compare apples to apples, gold to gold, tech to tech. But right now, we are seeing a ghost in the charts. We are seeing the current silver market mimic almost move for move the legendary Bitcoin run of late 2016 and 2017. If you feel like the floor just fell out from under silver, if this fractal holds true, fractal is after Benoit Mandelbrot, whose disciple, founder of the Black Swan, the Lebnasim. Fractal is basically the math behind technical analysis. And of course, the math is what made Jim Simmons a billionaire 40 times over. So before we talk about where the price is going, let's make sure we know what we're looking at. So if you're new to trading, these charts might look a bit busy, but they are actually very simple once you break them down. On the top half of your screen, you see price action. Notice the vertical axis is logarithmic. That's just a fancy way of saying we care more about the percentage of the move rather than the raw dollar amount. And we all into a relative world here. So, see those dashed green lines? They are called high water marks. Think of them like a high jump bar at the track meet. Once the price clears the bar, it stays there as a reference point until the price makes a new all-time high. Now, look at the bottom half. The red mountain range basically hanging upside down. This is a drawdown chart. This measures the pain. It shows you exactly how far the price have fallen from its most recent peak. When that red area gets deep, it means investors are panicking. Okay? But as you'll see, the bull market deep red often leads to big green. I know sometimes it's a little bit difficult and complicated. Say, what's this guy showing me with all these charts? But that's the only way to make money. It's not that easy. If it's easy, everybody will be doing it. If I just show you a chart and say, okay, this is where we are now and tomorrow we're going to be there, it doesn't work that way, I hate to tell you. Anyway, the Bitcoin 2017 precedent, left side. Okay, so basically, again, you've got the left and the right. The left is Bitcoin USD. The right is silver price action, right? And this is from 2016, 2017. And then from 2025 to 2026. And what we're comparing is the BTC USD price action and the silver price action. Now, of course, the time period is different. On the left, we know what happened with Bitcoin. That's what the line goes all the way across. And on the right, we don't know what's going to happen next because it stops as of February 1st, 2026. If you look at the left side, this is the Bitcoin from October 2016 to March 2017. And we follow the numbers with me. So look at point 1, Bitcoin was screaming higher, hitting that high water mark, feeling invincible. Then out of nowhere, it falls off a cliff, right? Look at the bottom line, drawdown minus 32.6%. Think about that. 1/3 of the value vanished in days. People were calling it a bubble. They were saying it's over. But look at the orange circle, marked point number 2. And this is the moment of truth in the Bitcoin chart. This was the exact moment where the weekend sold, the smart money stepped in. It's always like that. That's what I always tell my members. Buy when everybody else is selling, which I did for silver. I almost did it with gold, but I bought it too soon. And sell when everybody is buying. The question mark on the chart points, right, towards this question mark towards the top right corner. If silver follows it follows the Bitcoin script, we aren't just looking for a small bounce. We are looking for a move that clears $100 and heads into $110 and $120 range by the end of March. And by the way, JP Morgan is targeting $125. That would be nice for them because they just collected 3 million ounces of silver at $80 when the market dropped. They had a huge short that they had and they executed it. So what is a takeaway? The math tells us that a 30% to 37% drop in a parabolic bull market is actually normal. It is a feature, not a bug. It is the market way of shaking out the people who aren't committed to the next leg up that can be even stronger. Committed meaning understanding of the risk. Risk is not just making sure you don't lose money, it's also understanding where you are. Is it guaranteed? Of course not. But when you see two different assets, 10 years apart, drawing the exact same signature on the wall, you have to pay attention. Keep your eyes on that high water mark. If we start seeing daily closes above $80, the V-shaped recovery is officially on. And that question mark becomes a reality. Are you buying this dip in silver? Do you think the time is different? I read every single comment, and I respond to all my comments, even after it's posted. So don't forget to hit that like button as well, and if this chart breakdown help you see the big picture, and then we'll come back to see if this is actually what's going to happen.